Joining us from CommSec is Craig James. Good morning to you, Craig. How did we go overnight with the markets?
Yeah, a little bit weaker, though a lot can change for the United States market moving into the last hour of trade. At one stage we had the Dow Jones down over 270 points, but currently it's down just 20 points or 0.1%, and similar sorts of declines for the Standard & Poor's and the Nasdaq. It was all eyes on the US inflation figures, consumer price index out last night. It came in a little bit higher than expected. The expectation was a 0.2% rise in the month of December, came in at 0.3%, and the headline rate, rather than 3.2%, it was 3.4%. So that could cause concern that perhaps US interest rates may not come down this year as fast as many had expected, and thus we saw the sell-off. But there's been a readjustment or reassessment as we've gone through the session. If we look at US 10-year yields, but certainly a measure sort of how people are concerned about inflation, it was actually down 4 basis points to 3.99%. Weaker in Europe, it declines around about 0.8% across the European region. And in terms of our share market, currently the expectation is down around about 40 points or 0.6%, but a lot can change in the next sort of 90 odd minutes. The oil price is higher. The oil tanker hijacked in the Red Sea was pushed up the Brent price by 0.8%, similar rise for the Imex price. That should help our energy sector today, but yes, it'll be bad for most other sectors, particularly in terms of the consumer-focused areas. We also have later tonight business inflation figures coming out of the United States, the producer price index, so all eyes will be on that, as well as a number of banks which will be reporting their earnings. JP Morgan, Chase, Bank of America, Wells Fargo, amongst those reporting earnings. We've got lending finance or housing finance data here in Australia today, and in China later today we also have the trade and inflation figures as well.
All right, we'll check in with you later this morning. Craig James, thank you.